all these things that are getting labeled AI, do they actually have the ability to learn, or are they really just automating things? And I think probably a good portion of what people are calling AI it's just automation, right? And that's not a bad thing. It's just we need to understand what we're talking about.
When it comes specifically to the financial advisor world, it's amazing how consistent some of these numbers are. And historically speaking, you go back several decades, these surveys that were done several decades ago, it was roughly between 30 to 40% of the adult population was using a financial advisor.
Right.
80s, 90s, 2000s, 2010s, the number actually stayed remarkably consistent. Yeah. Somewhere between, 30 to 40% of the adult population was using a financial advisor. I suspect in the next 10, 20, 30 years, that number is probably going to stay the same. Hello, welcome to another edition of the Retirement Planning Happy Hour. Eric Douglas, Chris Vaughn, Family Wealth Planning Partners, headquartered in Louisville, Kentucky. Very happy to be here with you again for another fun, exciting episode all about AI today. And not really all about AI, I should say.
Not a little bit all more, of it. That might take a little while.
A little bit more specifically, though, AI as it relates to kind of the investing and finance world, kind of the world that we live in. We see this topic a lot around, AI replacing financial advice. Actually, you see it for every profession, right? Yeah. Is AI going to replace, this profession and that profession, and all these white collar jobs are going to go away because AI is going to take all the jobs. And we've done episodes.
We've talked about that. Yeah.
We've talked about that, but I think we're going to talk more specifically around kind of our industry, the financial advisor community, if you will, the investment world, and talk about how AI is kind of coming into our world. What it might or might not be replacing, whether or not that is a good or a bad thing, what that means for us, what that means for investors, what that means for the entire investing community as a whole, right? And maybe kind of glean where we might be going over the next 5 years. So we'll kind of broach some of those topics and maybe even more. But with that being said, we have a pretty good little pour here today.
We got one you're going to like today, and I don't know if you've ever had this one or not.
I was trying to remember if I had or not, and I thought we had done a podcast episode, but you went back and looked, and we'd never done one.
And I was like, see one. Doesn't mean I didn't miss something.
So I guess we had not. Maybe I just made it up in my head or had a dream about it.
But this is one of those that if I'm wrong and we actually did this one before, then we're treating ourselves to an encore presentation. Yeah, this is Blanton's Gold. So Blanton's is maybe one of the more famous bourbons that is out there right now. It's one of the ones that everybody says, oh, you got to have this one. This is the big one. It is probably the most overhyped bourbon in the world, certainly in the last 5 years. Regular Blanton's is good. They tout themselves as the original single barrel. They found that there's a sweet spot in the rick house that produces a better bourbon. If they put it in that area, that's where it came from.
Oh, and to be clear, it is very good.
Oh, it's outstanding. Is it as good as the hype? Not in my opinion, because the way that hype drove the price on just regular Blanton's. I remember not that many years ago when I could pick it up at Kroger anytime for $49 to $52. Yeah. Right. So it's kind of in that sweet spot that we talked about.
Well, some of the hype too is around the
and it does. Okay, it's got the horses on the top, and if you don't know this, the horses on the top, if you collect all of them, it looks like a stop motion of a horse running a horse race and then winning.
And spells Blanton's.
And if you look really closely here in the lower left-hand corner, by the way, the horse is running from left to right if you're looking at it correctly. In the lower left-hand corner, there is a little letter that does spell out Blanton's if you get the whole thing. And there are two N's. And people say, well, how can you tell the difference? One of them, if you look real close, and reading glasses ain't going to do it, you're almost going to use a magnifying glass, does have an apostrophe. So that's the second one. But anyway, that's just regular Blanton's. There are several variations on Blanton's, and this is where we get interesting. This is what most people would consider to be the top end of Blanton's. That's the gold. So it's effectively, Blanton's is always placed in that sweet spot in the rick house. This is the first pick of the Blanton's. That gets to be the Blanton's Gold. And it is proofed to 103 proof. So that's a little bit different. If I remember correctly, this is mash bill 2, so that's the higher rye mash bill at Buffalo Trace. That is always put into the barrel at 125 proof, and then whatever it goes up to while it's aging, then they water it down to get back to the proof that they want. Regular Blanton's is 93 proof. To my knowledge, it has always been 93 proof. The gold is 103 proof. Personally, I'd like to see them go up to 106, 107. I think that's the real spot, but 103, it's pretty outstanding. This particular one is, if you notice the little tag hanging there, this is a barrel pick. So depending on who did the barrel pick, this would be a top end of the top end product. This was actually done by a liquor store down in Knoxville, Tennessee. I happened to pick it up when I was down for a ball game last year. They had the whole barrel, and boy, did I want to buy the whole thing. I don't make that kind of money, right? So not even a fraction of it. But that's where this came from. You can see I've thoroughly enjoyed the bottle up to this point, and we're going to have a little bit more of it today. But that's it. This is a barrel pick by Pops of Blanton's Gold.
Yeah, we won't discuss you being a Tennessee fan or anything.
No, I'm not a Tennessee fan at all. Like there's a Tennessee flag in my front yard just to make all my UK fan neighbors. Actually, irritated.
I did see a funny video. So there was a country music concert going on at Neyland Stadium, and they brought some guy out in a UK hoodie to sing a song. One of the guys in the band or something came out and sang a song, and he was wearing a UK hoodie.
Oh,
and
that would have been fun.
Well, he was getting into the song, and he was singing his heart out, and the entire stadium was booing him the entire time.
Oh, absolutely.
It was pretty funny, and he could tell he was eating it up. He was loving it. It was pretty funny. So anyway, so AI. Where to start?
Well, let's
it's a pretty broad topic.
Let's start with why we came up with this subject.
Yep, good idea.
I think that's a good spot right there. We were kind of talking about what kind of subjects we wanted to do, and just for fun, we went on ChatGPT. That would be a AI platform,
absolutely.
Right? And we asked the question. We printed it out so we could remember it. This is exactly the way we asked the question. The top 10 most talked about and trending financial planning topics right now. Mm-hmm. And number 1 was AI in personal finance and investing. So we thought that might be a pretty good place to start with our topic.
Yeah, and that topic in and of itself, I mean, I'm so sick of the term AI.
I think we need to start with that. Yeah.
Because AI, I think just a lot of people are just using that as a catch-all term for technology. Yeah. And technological advances have been occurring, especially over the last 20, 30 years, just at a very, very rapid clip. And AI specifically is another advancement in technology, but I think people are just assigning, it's become such a buzzword that any advancement in technology is just being chalked up to AI.
It's AI, right.
Okay, what does that mean?
It's become generic.
Yeah.
To me, now I could be defining this wrong, but my thought is, AI, what's it mean? Artificial intelligence. Well, what makes something intelligent? That's its ability to learn, right? That's the way I personally define it. So all these things that are getting labeled AI, do they actually have the ability to learn, or are they really just automating things? And I think probably a good portion of what people are calling AI it's just automation, right? And that's not a bad thing. It's just we need to understand what we're talking about.
Yeah, and you're putting it under the banner of AI to make it sound a lot more fancy than probably it really is. But
well, you know what? That maybe is a selling point to the general public, how you sell your product. It's an AI product, right?
Yeah. So anyway, we wanted to relate this to kind of our industry specifically. And I think in order to do that, we definitely kind of want to go back a few decades.
Okay.
For sure, around some of the ways that the industry has progressed. And because one of the topics, at least in our industry, and maybe some of the people listening to this aren't really privy to some of these conversations, but we get inundated with newsletters and, we get newsletters all the time, financial publications, we get on their mailing lists and we get articles and we see articles and you go to conferences and it's all about, is AI taking over the job of financial advisors? Mm-hmm. Right. And so using that as a backdrop, I came across some pretty good stats because when you go back and look at the history of the population or the percentage of the population historically that has used financial advisors, it typically stays about the same. Mm-hmm. And through all the different technological advancements that we've had in the industry, there's still roughly the same amount of people using financial advisors as there were 30 years ago, 20 years ago, 10 years ago, et cetera. And I really don't see that changing too terribly much. I think AI is going to be a bigger thing in the way that advisors do their jobs. And I think there's already been a little bit of a change in the way that most advisors are positioning themselves. And I think to give us maybe a little bit credit, pat ourselves on the back, I think we may have been ahead of that trend a little bit. But when you go back and you look at what an advisor was doing or what financial advisor meant, that term meant back in the 80s.
There you go.
Yeah, or really even go back
70s,
before the 80s. Let's go back to the 70s, right? Or earlier than that. You're probably talking about someone at the bank who was opening CD accounts for you, right?
Right.
CDs and savings accounts and putting your money in, basically putting their money in those accounts, because the way that the world worked back then was you worked for a company for 30, 40 years, you retired, you got your pension, right?
Keyword there, pension.
And people weren't retiring with big 401ks, and they weren't retiring with massive amounts of wealth. The amount of money that they did have, they pretty much just threw it in the bank and let it earn interest. Right. Nothing wrong with that, right? But people were living off of pensions back then. We had a much more of a pension retirement system, far more than we do today, obviously, unless maybe you're a government
I was going to say the only place that they are still prevalent is in governments. Right.
But the term financial advisor was probably someone at the bank who was just opening up your accounts, really. And the people that were investing in stocks specifically were very much the ultra wealthy.
Right.
Ultra wealthy.
And they dealt with, what did they call the individual they dealt with? I heard this in a movie. It's an older movie I was watching, I don't know, a few weeks ago. You didn't call your advisor, you called your broker. That was the word that everybody used because it was a stockbroker.
Well, that's where I was going to go.
Somebody who was physically trading those stocks, right?
Well, that's where I was going to go next. So kind of when you get into the 80s and you get into like the quote-unquote Wall Street era, right, and things were becoming a little bit more technologically advanced, you weren't using an advisor, you were using a broker. Yeah, exactly. You were using a stockbroker, someone who was buying and selling stocks or picking stocks on your behalf. It wasn't someone who was giving advice. It wasn't anyone that was managing your overall portfolio. They were managing kind of maybe a piece of your portfolio, or they were managing an account. But at the end of the day, they were buying and selling stocks.
Right.
That was their job. No consideration on taxes, no consideration on retirement income, no consideration really on anything else. Estate planning, any of the other things that we talk about holistically, if you will. They were strictly worried about buying and selling stocks, picking stocks, what were the next stocks that were going to hit. Kind of a risky way to build a portfolio, right?
Absolutely.
At least by today's standards. But there was that technological advancement, or I guess, the way that the industry evolved, right?
Yeah.
So we went from kind of the bank advisor to the broker. What also happened over the 80s was we had the advent of mutual funds. Right. And so for those that don't know really what mutual funds are, I think most people have a pretty good understanding of what a mutual fund is. But basically there's kind of a manager, a fund manager behind the scenes, and he's buying and selling and picking stocks to be put into a fund. So you have a fund or a basket of, let's say, 100, 200 different stocks. And that fund is a collection of the returns of all of the different stocks that make up that specific fund, right? And you can go back and you can search databases, and I've seen some of these articles where people were worried in our industry about mutual funds replacing the broker.
Right.
Right? Mutual funds replacing the broker and replacing the financial advisor. I hate that.
We hate the phrase financial advisor. It is so generic.
Because no one knows what that means, right? But so many people back then were worried about the term, or about mutual funds in general, just replacing financial advisors and replacing the stockbroker. Well, it happened, I would say.
I would say they morphed.
But it evolved.
Yeah.
Yeah. And the term financial advisor kind of morphed into something else. It morphed from being a stockbroker into being kind of a mutual fund picker, right. And maybe someone who was, picking mutual funds, and then maybe starting to build diversified portfolios using mutual funds as opposed to using individual stocks,
right,
in the name of diversification and maybe less risk, more safety, whatever the case may be, right? So anyway, the industry was trending in a certain direction, but because of technological advancements, I would say that it just morphed into something different than it was. It didn't get better. It didn't get, well, I would argue, actually, yes, it 100%
it
did
got
get better.
Right.
But it wasn't about whether or not it got better or worse. It just
got different.
It got different.
Yeah.
Right? For lack of a better term, it was just different. And then, my dad was a stockbroker for a while there in the 80s as well. I remember he lost his job and had some issues in the late 80s when Black Monday hit, right? But that was because the stock market crashed and so many people's jobs were tied specifically to the performance of stocks.
Yeah.
And it's just a different beast. It's a different animal today as far as the way that our industry serves clients. So what do you got any thoughts on that?
No, to me, the mutual fund, the advent of the mutual fund is when the way that the average person out there invested really changed, because you didn't have to pick the stocks. When you were sitting there talking about that story, and there were two movies that kept popping up in my head. One was Trading Places, which this day is one of the funniest movies I've ever seen in my life. If you've never seen that, not safe for work.
Nope.
There are a couple scenes in particular, but an incredibly funny movie. But that was about commodities trading. So it went right back into those individual security type of things. And then the other one that popped in my head, which is even less safe for work, I would argue, would be Wolf of Wall Street. And I was thinking about...
not Wolf of Wall, just Wall Street.
No, I was thinking Wolf of Wall Street, particularly the scene at the beginning where he's calling people up and he's selling the penny stocks. But that, to a great extent, was how those individual securities were sold back then. They were selling individual stocks, and the mutual fund kind of made that start to go away. That's what I was remembering as you were telling that story. That's where mutual funds changed everything.
Okay, I thought you were talking about movies from the 80s.
No, not movies from the 80s, but movies that part took place around the 80s. Actually, I think that movie started in the 90s, but you get the point.
Yeah. Well, same kind of deal, but yeah, so, I mean, all that to say, there were technological advancements. The role of the financial advisor changed.
Yep.
The type of a job that an advisor was doing changed, but it still existed.
Mm-hmm.
It was just different.
And I would argue that there were probably brokers / advisors who did go away because they couldn't change with things that changed. And that's not a bad thing. Mm-hmm. That's the people that are still serving the clients out there are going to be simply better at it because they did morph with the technology.
So as you kind of get into the 90s and the early 2000s, you had portfolio managers. Mm-hmm. They weren't stockbrokers, but they were portfolio managers, people that were building portfolios using primarily funds.
Right.
Some were still picking stocks. You could usually tell the type of advisor you had based on their age.
Yep.
And even that's even still true today, by the way.
Absolutely.
You still come across some old school guys that are still building stock portfolios. You don't see nearly as many of them anymore, but they're still out there. They do business the way that they did in the 80s, and I know of a few here in town that do.
I have seen that statement more times than I care to admit to, right?
God knows I love seeing those statements because, that's another story.
I know how to fix it.
Yeah, I know how to fix it. That's probably the easiest way to put it. But anyway, so the job was changing. Mm-hmm. Some advisors changed with it. The ones that are, kind of wanted to change with the times changed with it, and they got better. Yep. Advisors got better. So instead of picking stocks, now they're picking funds and they're building diversified portfolios. But at the end of the day, they're still primarily portfolio managers.
Now, I do want to clarify something because I've had people ask me about this. There's a confusion. When we use the word funds, a lot of people think that is a more generic term. When you use the word funds, you are typically referring to mutual funds specifically, not what we're getting ready to talk about next, or just securities in general.
When you say funds, usually we're referring to mutual funds or exchange-traded funds.
Yes. Now that goes into the next part. There you go.
I was gonna. We're kind of gonna get there as well, but. I would say the other thing that happened kind of around the 80s was the advent of the workplace retirement plan.
Yes.
401ks. 80s and 90s especially, the 401ks really started to become a thing. And the way that people invested really, really started to change. And so now you kind of had the world of investments, the world of the stock market now being open to the masses, so to speak. So you weren't only dealing with ultra wealthy individuals, you were dealing kind of with everyday mass affluent Americans that now could contribute money pre-tax to tax deferred account. And
as the pensions went away and the 401ks came out, people were kind of forced into paying attention and learning about this stuff at the same time.
Yeah. And so that's when people didn't know how to do this stuff. And that's why they were relying on portfolio managers / financial advisors, right? But, people that manage the portfolios for them because maybe they weren't familiar with the way that the market worked and all the, things that happen and the way to build portfolios and all those things, right? So the market started shifting towards, managers, right? Well, now what kind of starts happening in the 90s? Now you start having the advent of the internet.
Right.
The internet starts coming out late 90s, early 2000s.
The information superhighway. Remember that phrase?
Oh, yeah, absolutely. I do, yeah. Remember the dial-up and, getting mad whenever someone called when I was trying to log in on, my AOL at home.
I'm having flashbacks, and they're not good ones.
Yeah, and you disconnected because someone called in because you could only access the internet through your telephone landline, which no one even knows what that is anymore. So I love every now and then I would still get a client that still has a landline. I'm like, why? Who calls you?
That's why. Why?
Yeah.
Anyway,
they're still saying, hey, my in-laws.
I was going to say
they still have it.
I've got family that still has it,
so anyway, we start transitioning into the internet, and now people are able to get what more quickly?
Information,
and they're able to get their questions answered a little bit more quickly as opposed to having to pick up the phone and call someone. Right, and they can maybe start to do a little bit of research on their own and start to figure out, maybe I can start doing some of this on my own. And we put together the pieces of a portfolio themselves, or put together a stock portfolio, or pick stocks, pick bonds, pick whatever they're going to do. But they can start to do some of it on their own because information is becoming a little bit more readily accessible than it was before. Now, obviously, you have early adopters. Just like any technology, right? There's a new fancy form of technology.
Widget, right, yeah.
Whatever the widget comes out. I remember those Oculus glasses that came out a few years ago. It wasn't really a big thing, but there were some people that were early adopters, and they immediately gravitated to it. And, whether or not the early adopters like it and adapt to it very quickly, it determines how successful it will be in the future, right?
Yep.
But, the iPad was the same way. You had people that were like, I'm never going to get an iPad.
I remember that discussion of Steve Jobs has lost his mind. This technology doesn't work. It's been tried.
I remember thinking myself, like, why would I ever get an iPad? What's the purpose of an iPad? And, here we are.
And you're sitting there staring at one, and how many people do you know that don't own one? Right? So...
But all that to say, so technology started to change, right? Information was more readily available. People were able to access information on their own. They were able to start constructing, maybe doing some of this stuff on their own, things that they had never been able to consider doing on their own before. Information was now accessible, right? So what does a financial advisor do?
They adjust. They
adapt. So the position changes. And so you start seeing kind of around the 2010s, right? The idea of a financial advisor becoming less of a portfolio manager, although that's still a huge part of what we do.
That's still a huge part of it, yeah.
But really you start to see them incorporating advice, right? Because now what has happened was all those clients that were starting to build 401ks over the 90s and the 2000s, now they're starting to what? Retire.
Yep.
And they're starting to get, now they have some money. And so now you have your average retired couple that has a pretty good little portfolio versus what the average retired couple had 20, 30 years prior, because the couple 30 years prior, they were retiring with a pension.
Yep.
They didn't have a big portfolio that needed to be managed. Now you have all these people with 401ks that started in the 90s starting to retire in the late 2000s, early 2010s. They need help. They need advice because now we have other issues that those people in the 60s, 70s, and 80s didn't have. We have tax problems, right?
There we go.
That's
going to be a big one.
We have tax problems. We have tax regulations. We have issues with estate planning, right? And how do we pass on some of these assets to the next generation? And what should I do here? What should I do there? What types of accounts should I be using? The other thing that's happening is people are starting to change jobs more regularly.
Yep.
So because people are changing jobs more regularly, maybe back in the day that wasn't happening nearly as much, but it wasn't a big deal because you didn't have a workplace retirement plan that you needed to transfer or do something with. Well, now that became a very regular, starting to become a much more regular thing, right? So now you have advisors in the 2010s, up through today, really starting to incorporate more and more advice into what they do. So now they're planning a little bit more as opposed to just putting together a portfolio of stocks, bonds, mutual funds, whatever the case may be.
Right. So now the question becomes, as advisors have moved more towards planners, and we've talked about that in the past. I hate to say this about our industry, but just because somebody says that they're a planner doesn't mean that they're the same kind of planner as the next guy who says they're a planner. There's different levels here, but that's a different podcast. The next logical step is that the planner starts to morph, right? Mm-hmm. So this is where we start getting into technology coming in. And, we said at the beginning, AI has become a catch-all phrase. But we've been incorporating technology into the way that we give advice, the way that we plan for quite some time. There was a thing that came out, and I want to say that the first time that we all really, really heard about this was during COVID, when we were all stuck at home and we were looking at our iPads and we were learning as much as we could because we were bored and we couldn't go to work. There was a thing came out called the robo-advisor. And I think that was one of the next things that kind of changed our industry was the robo-advisor. You want to go down that road?
Well, before we even get to there,
okay. You
because
want to back up?
Let's back up before that, because yes, that started to become a thing around COVID.
Yeah.
But even before that, though, I mean, YouTube.
Oh, absolutely,
Google.
yeah.
I mean, so we talked about the internet in the early 2000s, but I mean, the internet is a vastly different place in 2020 than it was in 2000.
Well, there's more information there.
Well, there's so much more information, but the way that you access that information is totally different. So now you have videos and streaming and just so much information at your fingertips at all times. And so that's what I always laugh about. Okay, well, what is AI going to tell you that you couldn't just Google a year ago?
Right.
Honestly.
Okay.
I mean, the information's been out there. It's not like the information has not been on the internet. So you can use YouTube to kind of get a lot of this information. Hey, our podcast right now, if you're not listening to us on Apple or Spotify or wherever you're listening to us, you can go watch us on YouTube. You can see our faces if you're not watching on YouTube, right? There's so much information available to you on YouTube and via Google and Bing and all the other search engines and AOL and
when you say that,
I forgot what they were back in the day, but
I am amazed. YouTube is a great example of the number of things that I have done or I've learned how to do or I've fixed by using YouTube. I remember, I literally had a broken door handle in an old car. How do I fix this? Because if I take it to a dealership and get it fixed, it's going to cost me $1,000 or something insane. I looked that up on YouTube, and sure enough, it was there. Somebody showing me how to take the door paneling apart and replace it. It's all on YouTube. I'm stunned how much is on there.
I very much get amazed whenever I need to Google something or find something on YouTube and the videos that are out there that somebody really thought to make a video about this.
I would honestly say it's to me, it's no longer, wow, somebody thought to make a video about this. It's so many people have thought to take a video about this or make a bit of video about this, I should say, that now it's organizing those. I don't have time to watch all of the videos on whatever subject it is that I'm looking up. So there's that much information out there.
But all that to say, you start going from a position of, okay, well, some of the information's available and you can kind of start to do some of this on your own and getting some of your initial questions answered, to now pretty much all the basic questions you just kind of assume already know. Right. They're already there. So now the role of an advisor in kind of the YouTube era, if you will, is not so much the generic advice, which is very, very readily available at the drop of a dime, just quick Google search, but specialized advice.
Yeah.
Okay. In making the advice relevant to the individual. And so, that's kind of that kind of became the next advent or the next, step in the evolution of a quote unquote financial advisor. Right. And really it's much more specialized planning focused as opposed to portfolio management and generic advice.
And I'm still seeing, I don't know about you, but I still see when I say a common basis, I don't think a week has gone by that I've not had a conversation about this with somebody where they are still looking at their current advisor or they still have a mindset of portfolio management is what we do. That's the job. I had that conversation with a family member over the weekend. whom I've known for decades, and they still have no idea what the modern financial planner does. They still think of it as portfolio management. And I think a huge part of that is because so many people in our industry haven't morphed yet. They're still doing that classic 60-40 portfolio, and they're just maintaining that. That's portfolio management.
Yeah. Or, and it's funny because I've been an advisor for, 7 years now, 8 years, I think. I've been in the industry far longer than that.
Right.
But I've been an actual advisor on this side of the table for, 8 years now. But I'm still kind of a baby in this industry. I'm 44, but the average age of an advisor is still well into the 60s.
Right. Absolutely.
I mean, you're younger than the average age of most advisors, right?
I'll be 55 this year. Yeah. I've been doing this for 12 years. I am still one of the young people in this business.
And so, we kind of take for granted the way that we do business, but you still look at the vast majority of, to your point, you still have a lot of advisors out there that are still kind of doing the status quo and kind of doing the business that they did, doing business the way that they did.
Right.
In the early 2000s, right? Kind of the portfolio manager / generic advice. And the industry has kind of moved on because the industry has been forced to move on because of the internet. And because of YouTube and Google and all the,
Because there's just more information available through whatever source, and there's a lot of them, to everybody.
Yeah. So, kind of fast forward to what you were getting to, robo-advisor. That kind of became the next generation or the next advent of things that are available out there to a certain set of consumers. So why don't you walk through what a robo-advisor is?
So, like I said, I don't know when these actually were first introduced, but I think the bulk of us first heard about it during that COVID
they
era.
They definitely came out before then. They became more popular.
But what the robo-advisor did was you were going to set up, I want this kind of a portfolio. So you hired the robo-advisor, or you picked the company and they would, you would pick the type of portfolio that you want. I want a growth portfolio. I want a protection portfolio. You could name it any number of different things. The robo-advisor then, within the framework that is set up, picks the stocks and or bonds and or mutual funds and or ETFs, however it's structured, and builds out that portfolio, and then makes the trades as needed based upon the rules that were set by the robo-advisor. So it takes the day-to-day human interaction out of it, but it does not take out the fact that a human being still has to set up what the robo-advisor is supposed to do. And that's how a robo-advisor works.
Yeah, it kind of takes the decision-making away, but it takes the decision-making, but it still has to operate under a certain set of parameters.
Correct.
And really the way that a mutual fund works is the same way, right? You have a mutual fund. Now there is a human fund manager kind of behind the scenes. Right. You have a Wizard of Oz behind the curtains picking and choosing the stocks that are going to be implemented, but he has a prospectus. Right. He has a set of rules.
He can't break the rules.
He has a set of rules that she has to follow, that they kind of have to stay within the framework of whatever the structure is of that specific mutual fund. So if you're managing a large cap strategy, you can't start implementing, small cap stocks into a large cap strategy. You can't start using international stocks.
It violates the rules.
Exactly. So you have to kind of stay within the framework of whatever the structure is of that mutual fund. Robo-advisors are the exact same way. It's just a different kind of fancier way of doing it, but it's really not that much different. You have a set of parameters. You have an idea or a purpose or whatever your goals are for a portfolio, and then you choose this is how passive or how aggressive I want the portfolio to be. And then the robo-advisor is going to kind of manage the account according to those guardrails.
It's going to buy and sell based on the rules that it is given.
Yeah, and
it can't violate the rules.
Yeah, and there's different robo-advisors out there with different prices and different strategies, but ultimately it's just kind of it's almost like an introduction to a real advisor. Yeah. It's kind of a gateway drug, if you will.
Wow, that's an interesting turn of phrase there.
It's a gateway drug.
Robo-advisors are gateway drugs.
Because if you're using a robo-advisor, you're kind of recognizing, okay, I probably don't know, or I probably shouldn't do this myself. I know that I need help, but I don't think I really need the full set of services that a financial advisor is going to offer. So this is kind of my gateway. This is kind of a good way for me to start, letting, something else or someone else kind of manage my investments that kind of takes it off my plate. So I'm not the one making the decisions myself. I'm not responsible, right? So I don't, because they don't want to be the ones responsible, and they want to feel like it's being done professionally, right? So robo-advisors are kind of like the gateway drug to using an actual real advisor. Maybe they're younger, they're more adept at using technology, they're well aware that they need help, but they don't need that much help. And so I think robo-advisors are a good thing.
Yeah, they can be, absolutely.
Generally speaking, right? Now, some are going to be different than others, but generally speaking, the idea of a robo-advisor, it's pretty good. And I welcome any and all people getting help to the degree that they need it. Mm-hmm. And you're probably talking about most of the people that are using robo-advisors are going to be maybe skew a little bit towards the younger side.
I would agree.
You're not talking about $1 million portfolios for the most part. But you're also recognizing, hey, I could probably use a little bit of help, and you're actually getting some help.
Well, okay, so it's interesting you say that the $1 million portfolio is probably not going to go down this route, but let's kind of...
And we'll come back to that.
I was going to say, I want to work through that a little bit. So imagine the individual who they've saved up a decent amount of money, right? Whatever you consider that to be. That person is going to be less likely to use the quote-unquote robo-advisor to manage the portfolio. But they're probably very likely to use an ETF, right? Well, an exchange-traded fund works very much like a mutual fund, except that once the person or persons or team of people, whatever you want to say, kind of sets it up, then it still buys and sells based on an algorithm that's designed. That's kind of the way a robo-advisor works, but within that one little slot, right? So I would argue that as the technology gets better, you're going to have more and more people with the higher size portfolios that are going to be willing to use this just because they have an understanding of it. Robo, I think that word scares a lot of people, but to your point, the younger people are not going to be as worried about that as the 65 or 75-year-old who's scared they're going to lose their money because a robot did it. And I think that's what they hear.
And that's actually what you just said. We're going to kind of come back to that idea about losing money. We're going to come back to that idea in just a moment. But, kind of when we get through robo-advisors, and now we're kind of to the age of AI, right? And using AI and outsourcing the portfolio management to an AI platform. This is a little bit different, but they're different thoughts. Kind of similar to the idea of a robo-advisor. A robo-advisor has a set of circumstances or a set of guardrails that they have to kind of work. There's parameters that they have to work within, right? AI is only as good as what you ask it.
Garbage in, garbage out.
Whatever prompts that you're putting into an AI system. Let's just use ChatGPT for example.
Okay.
And there are people out there that do this, that build portfolios using ChatGPT. Now, there's a radical difference. I can get a radically different answer from ChatGPT on what types of stocks I should be investing in based upon what I ask it. Right. So if I ask it what are the best stocks for a defensive position in case the market were to correct 20%, it's probably going to give me a list of stocks, and I can ask for a list of 10. I can ask for a list of 50. Right. Versus I want the most aggressive stocks. I'm trying to get the best return. What are the best stocks to give me the best return over the next 6 months? I'm going to get a radically different answer.
Right.
Okay. What you're looking for from AI, it's only going to be as good as what you put into it, right? I mean, whatever you ask, it will give it to you, but it's only going to give you what you ask.
Are you asking the correct question?
And that's the thing. And you can even go back to just using Google. And I talk about this with clients a lot. I know you do too, because I've heard you use this exact phrase. Google's going to give you all the answers that you need, but are you asking the right question? And you can even go to Google and you can ask a question of Google, and you can get 20 different answers.
Right.
You can go to YouTube and you can ask a question about how to generate retirement income. What's the best way to generate retirement income in a portfolio? You're going to get 20 different videos with 20 different answers.
Right.
Which is the best one for you?
Okay, so kind of go on with that question. You've said this several times. You're going to ask the question, what is the best X, Y, and Z, whatever the rest of that phrase is? Well, define best, right? Yeah. And I think that's what most people do. I'm 100% guilty of that. Best what? How do we define that? Best according to whom? So, for example, right, we did the ChatGPT search in order to find some subjects to do today. If you look in the fine print, I think you need a magnifying glass on what we've got here. When it comes up with the source of where it got that information, it'll print that in very small print. So, for example, I'm looking at a particular stat right now, and down in very small print at the end of it, it says CFP board. So it's still finding information that a person or persons put on there. Did you ask the question correctly? Did it search for the correct open source material? Blah, blah, blah. We can keep going on and on and on. Mm-hmm. I think that's the problem with when you say asking the right question. Get the word best and be aware, right? My wife she's had all she wants of our luggage, right? It's traveled enough at this point in time. It's starting to show its age, and she wants nicer stuff. And I said, well, honey, why don't you search for it? So she did. She put, what is the best luggage? You should have seen some of the results that she got. It was all over the place. She was arguably more confused after she asked the question.
It's like going to the Cheesecake Factory and seeing the menu at the Cheesecake Factory.
Exactly. Yeah. I don't know. It's so overwhelming, right? So this is where asking the correct questions is part of the problem. And then the other part of the problem is not just phrasing. It's knowing what question to ask in the first place, right? This is where it comes back to you can talk about automated portfolio management, be it robo-advisors or AI advisors or whatever, but are you telling the software what you want to actually accomplish? Are you asking the questions correctly? Most people don't even know how to phrase the question because they don't know what they really want to have answered. Like my wife, what's the best luggage? Well, in your case, you're not looking for something that has fabulous rollers on it. You're looking for check-in luggage. I said, why do you care about that? Can it get you from the car to where you check in? How does it actually pack things? That's where I think people run into trouble when they don't ask the right questions. They don't know what questions to ask. They don't know how to phrase them.
Mm-hmm. Yeah, and so same thing with Google, same thing with YouTube. AI is no different, right? Mm-hmm. This is a major technological advancement. Yep. It can be a big deal. It's a very cool thing for a lot of people, and I think it's a way to make a lot of companies more efficient and better and more productive, and that's all fantastic. I think a lot of people get a lot of consternation and anxiety around AI because they see the scary headlines. But really, to me, AI, I'm using air quotes here, isn't really any different than YouTube or Google, or I keep using YouTube or Google. Yeah, any search engine, the internet, right? The internet. So different than the internet. It's a technological advancement that didn't really exist before. The information's already out there, though, guys. I mean, most of the time you go on ChatGPT and start asking questions, Gemini, Claude, Grok, whatever AI platform that you're using, what are they doing? They're scouring the internet. It's a search engine.
That's it. It's a search engine.
It's a search engine that talks to you in a little bit of a different way. It's cool. I like ChatGPT as much as the next guy, and I use it. And
does it have some capabilities beyond the traditional search engine? Yes. Most people don't even know how to use that part.
Exactly. But I keep going back to, and we pulled up some stats, but, we're looking at stats around, historically speaking, what percentage of the population uses a financial advisor.
Yeah, there you go.
And that's kind of how I wanted to tie all this together, because when it comes specifically to the financial advisor world, it's amazing how consistent some of these numbers are. And historically speaking, you go back several decades, these surveys that were done several decades ago, it was roughly between 30 to 40% of the adult population was using a financial advisor.
Right.
80s, 90s, 2000s, 2010s, the number actually stayed remarkably consistent. Yeah. Somewhere between, 30 to 40% of the adult population was using a financial advisor. I suspect in the next 10, 20, 30 years, that number is probably going to stay the same. You're always going to have your DIYers. You're always going to have the people that go on YouTube and want to do it all themselves, and they're going to watch all the videos. You're also going to have people like me that are going to go to YouTube and say, okay, this is a 30-minute video. I started watching it. I got confused watching the video. Screw this. I'm just going to call a guy.
Yep.
And, some people are not going to be like me, but a lot of people will be. It's also important to understand, too, that that's just across the entire adult population. When you start factoring in the level of wealth that we're talking about, as your level of wealth increases, that 30 to 40% increases dramatically as well in conjunction with it. So generally speaking, the more money that you have, the more apt you are to outsource the management of your investments, because you understand how important it is.
Well, I think there's two aspects to that. When you talk about how important it is, I think part of that is the more that you've built it up, the more you feel like a mistake is a bigger catastrophe.
Exactly. And you have to, avoiding mistakes becomes a much bigger deal than trying to get the absolute biggest return that I can possibly get.
So I think that's a big part of it. People as the money, the investments, whatever, get bigger, they realize this is a bigger potential risk. So they want to get professional help, right? But the other side of it that I think that I see is, as people have more and more money to work with, they have less and less desire to deal with it, and they would rather go do something else. Well, and I'll give you a good example. When I was in high school, back when, Wilson was in office, I think, we learned how to work on cars. At one point in time, I knew how to rebuild a V8 engine. I didn't mess with transmissions. That was outside of my realm, right? I still know quite a bit. I could change the oil on my car now. I choose not to. I would rather pay somebody else to do it because I just don't want to deal with it, right? It's not a matter of it's not worth my time. I just don't want to deal with it. As your wealth increases, there are more and more things that you could maybe do yourself. You would rather just pay somebody else to do it for ease of operation, so that you can go do what you really are good at, or so that you can go enjoy what you really want to enjoy, because my time is valuable to me, right? So I think that's another part. As the wealth increases, more and more people are wanting to hire professionals to do it because they would much rather go enjoy it.
On a much smaller scale, I finally gave up cutting my own grass. So this year...
I've heard this story. This is a good one.
This is the first year I've decided not to cut my own grass. I'm 44 years old. I've been cutting my grass since I was like 11.
Yep.
Okay. My dad, my parents, I was cutting grass. I was doing jobs for other people.
Right.
Show up and, I've been cutting grass for well over 30 years. I'm good at it. I can do it. I know how to do it. I have no problem doing it. I mean, I used to kind of like doing it. Throw on the headphones, throw on some music, listen to some tunes for a couple hours, maybe get a little bit of a tan, right? It's fine. Right. I had no problem cutting my own grass, and I'm perfectly capable of continuing to do it today. Over the last couple of years, as I've gotten a little bit older, I've started to realize this is becoming a bigger pain in my butt.
Right.
Not because I didn't know how to do it. I still know how to do it. Not because I couldn't do it. I'm still fully capable of doing it.
Sure.
Physically, I can still absolutely doing it. It was just, I had more stuff going on. My kids are getting older. They're involved in sports. I had stuff going on the weekends, and then I would, get there, and I was having to carve out a couple hours on my weekends every single weekend to go cut the grass. And it was becoming much more of a chore than an enjoyable activity.
Right.
I finally hired someone. I was running out of time. I was like, I need my grass cut. I don't have time to cut the grass right now. I hired someone to come do it. The price was reasonable. He came out. There was a team of 3 people that came out. I had 2 guys on riding lawnmowers, one with a push mower.
10 minutes.
They knocked it out. They knocked it out in 10 minutes, and I'm sitting there watching them, and I'm just sitting there drinking a cold drink in my air conditioning, and I'm like, I'm never doing this again.
Yeah.
I'm done. I made up my mind at that moment. I was like, you know what? This is just too simple for me to outsource. The cost is negligible, right? The cost was reasonable. It's interesting how many people, and you see in my neighborhood, it's not like I'm in some ultra luxury neighborhood by any means. How many people in my neighborhood outsource the cutting of their own grass? That's a fairly low rent, low risk activity that they are happy to pay someone else to do relative to your retirement income, relative to your portfolio, relative to your life savings, right? It's interesting to me how many people will try to go watch YouTube videos and fix their own plumbing because they want to save a few bucks to avoid, but they're not worried about avoiding a mistake when they make a plumbing mistake, which could cost them significantly more.
Thousands of dollars.
Exactly. Right? If they screw that up, right? But, they'd say, I don't need to do my own, I'll do my own investments. I don't need to pay someone for that. But if something gets screwed up, your life savings are at risk. It's amazing to me the people that just take that approach.
That's a great one. I've thought about that many times. People will do all kinds of things on their own to save a few bucks, or they'll start going, I don't really know what I'm doing. I don't do electrical work in my house because I know how it works, but I'm not an electrician. So I'll hire an electrician to do it, right? Because they're worried about setting a fire or electrocuting themselves, or the plumber example. I am not going to die because I made a mistake with my plumbing, but I might have a mess that is not worth cleaning up. But yet they will do the DIY investment part because they want to save a few bucks. And the mistake could be so catastrophic that they can't recover from it ever. Yeah. Right? I've never understood that one. I would much rather hire somebody else so that I can go enjoy.
But all that to say, AI is no different.
Exactly right.
AI is no different than Google or YouTube or the internet in general. The information's out there. Mm-hmm. It's already out there. If you were someone who is apt to use YouTube to DIY your own portfolio, and we can say whether or not that's a good thing or a bad thing, but if you were someone who was going to do that anyway, you weren't someone who was going to use an advisor anyway. Right. You were always going to find a way to do it yourself, right? Mm-hmm. You were going to find a way to do it yourself when you were using a landline and a dial-up modem to get on the internet. You were going to find a way to do it yourself. Yep. You were going to find a way to pick your own stocks, okay, back in the 80s and 90s. It's much more personality-based, but it is interesting, and I've had so many clients say that, I've done it myself, and I've been able to do an okay job, but you get closer to retirement, you get a little bit more anxiety, and you just need more professional help. And outsourcing to a computer or someone on the computer screen doesn't really feel very comfortable to you. Mm-hmm. And it's interesting because everybody in our industry freaks out about the next technological advancement. They really do. The amount of financial publications that are putting out articles around Twitter when it started becoming a thing 10 years ago or 15 years ago, and how are advisors getting on Twitter, and are they getting clients from Twitter, and all and Facebook and all these other places. All this information is available, and yet the numbers stay relatively consistent. 30 to 40% of all Americans, adults, are using a financial advisor, and the more that your wealth increases, the higher that number gets, okay? What's also going to be very, very interesting to me is what AI has not seen yet?
What's that?
A bear market.
Oh, excellent point, yes.
All of these AI strategies and all these people touting, I'm going to use AI to manage my portfolio.
And look how good, all the advertisements, look how well it did.
Look how well it's performed, and look how well it's doing. You know what it's not seen? 2008.
Yep.
It ain't seen 2001, right? It ain't seen the early 2000s. It's not seen a sustained bear market. All of these strategies have occurred in the middle of basically the greatest bull run in the history of the stock market. You can throw a dart at a stock and probably win.
That's right.
Over the last 15 years, right? That's not always going to be the case. That will be cyclical. That will change. I'm not predicting that's going to happen this year. I don't know when it's going to happen, but it will happen at some point in my lifetime. We're going to get
multiple times, most likely.
Probably. We're going to get another early 2000s. We're going to get another Black Monday in 1987. We're going to get another gas shortage crisis. Right. We're going to get another 2008 real estate. I don't know what it's going to be, but we're going to get stuff. Stuff is going to happen. And we're going to have sustained bear markets. And none of these robo-advising strategies and none of these AI strategies have lived through anything like that in the stock market. It's not as easy as just picking stocks and just expecting them to always go up. You have to be able, especially when you get into retirement and you're no longer working and accumulating, you have to understand that when you're paying yourself an income, the strategy becomes remarkably different, and you're not always going to be able to glean the best strategies on AI unless you are asking it very, very specific questions.
And which questions
to ask, right? And even then, you might not even be getting the best information because AI is just scouring the internet for what's already out there, which you can do by yourself, by the way.
Yep. That's right.
So there's a lot of things that AI is going to help with. AI is making our jobs easier.
I was going to say, are we, in our industry, are we going to use AI? Absolutely.
Yeah.
We use it every day in multiple ways.
And we've become more productive because of AI.
Absolutely. It has taken some of the mundane work that is very time consuming off of our plates.
Yeah.
Right. But making the decisions and being creative and figuring out ways to solve unique problems. I don't know about you, but I'm fairly comfortable in saying you're no different than I am in that you've never had two clients that are identical. They all have unique situations and unique problems and unique things that come up. And that requires a certain level of creativity that I don't see that being replaced by technology. So our industry will morph as it has in the past. We will use the new technologies to benefit either or ourselves or our clients, but it's not going to eliminate the need for the industry.
Yeah. And I think it's going to make cream always rises to the top.
Yep.
Right. And I talked to my sister a lot about this. I talked to some other buddies that are realtors. My sister's a realtor. I have some really good friends that are realtors, and they talk a lot about this because there's always services out there to go buy your own home, forget the realtor, don't pay the realtor fee, blah, blah, blah. And you talk to any realtor that's worth their salt, and they're like, yeah, I'm worth it. You 100% should always use a realtor.
And having had that experience with different real estate agents, I can say the good ones,
they're worth it.
100% worth the money.
Yeah, and I'm not a realtor, and I will always use a realtor. I'm happy to use a realtor. I'm happy to pay the fees. And it's fine. And anyone who kind of has been through an experience with a good realtor will tell you that, right? Financial advisors are the same. Yep. Pick a profession. Pick any profession out there. It is always going to be the same story. The cream will rise to the top. If you are good at what you do and you can justify the fees that you charge, right? Plumbing. We talked about using a plumber. Plumbers are the same way. I found a brand new plumber, by the way. I'm so excited. So ecstatic I found a good plumber. Finding a good plumber that's, reliable and relatively, relatively cost conscious is just amazing, right?
Yep.
So I found a new plumber. I'm really over the moon about it because he was fantastic, came out quickly, did great work.
Things as homeowners we get excited about.
I've already used him twice, and so I got a guy on speed dial. I got a new guy because my old plumber he retired. So, but anyway, but he's worth it, and I will happily pay him. Yep. And he came out and he did some work in my house. Half of it I probably could have done myself. But I would have had to get on YouTube. I would have had to find the right video to figure out what I wanted to do and how to do it. Then I would have had to go to Home Depot, buy all the supplies to figure out, and then I'd have to come back and realize, oh crap, I bought the wrong size. I got to go back to Home Depot. Finally on my fifth trip to Home Depot, I probably would have said screw it and called them anyway. Right. It would have taken me far more time to try to do it myself than to just hire the right guy in the first place to get it done quickly at a reasonable cost. Right. Advisors are no different. Realtors are no different. Pick an industry. Yeah. It's no different. It's not like the economy is going to crash because AI is going to take everyone's jobs. It is not going to happen. It's not going to happen in our industry. Our industry will change. Our industry will get better because the good ones will continue to get better and will continue to evolve. We will be one of those firms that does that. We already were ahead of the curve.
We're way ahead of it, right?
But we're thriving in an era where AI is supposed to be taking all of our jobs, right? And I know that there's a lot of firms that are not. Yeah. But all that to say, I think that's probably a pretty good place to wrap it up.
I think that's a great place to wrap up. Let's talk about bourbon.
Great. What are you going to say about it?
If you're watching this on video, I poured a reasonable pour in there. Both of us have had an empty glass for quite some time.
It didn't take long to get rid of this one.
And I thought, ooh, this is a great time to just pour a little bit more in there. But full disclosure, because of scheduling issues, we are probably going to record another episode today. So pouring another portion of the Blanton's Gold would probably be a mistake. So that's why I opted not to. If you've never had Blanton's Gold, and by the way, I forgot to say this, not only is it really one of the prettier bottles, Blanton's does have that unique octagonal shaped bottle. It's not just the horse on top. It's just a cool presentation. The gold version has no visible label. It actually, I don't know if this is a label or if it's printed on there. I think it's just printed.
But it's printed on there. Yeah.
It's a clear bottle. It's got the gold print on it. And of course, they do put this was bottle. This is registered bottle 128 out of the barrel that it came out of, which is it's barrel 398. It's cool. They put all that information on there. It comes in this really cool black felt bag. I don't know what use it is once the bottle is empty. If you're into presentation, and I think younger people really are, the whole concept of the unboxing video, I still don't get that one, but my kids are like, Dad, you don't want to watch that? Apparently this is a big deal to some people, so Blanton's really gets this one right. You are going to struggle at any price to find a better bourbon than this one. Agreed?
Absolutely. It's a fantastic bourbon. Now, is it worth what you have to pay
Let's
to get it?
talk about the price for a second real quick. Okay, so I have no idea what the actual retail list price is on Blanton's Gold. I think it's $149. Yeah. I could be off by a big margin. I don't know, because you don't see Blanton's Gold at retail ever. No, and I doubt if you're ever really going to see a lot of that, because they're always going to keep the production low enough to make a demand for it. I can tell you that when you get into barrel picks of Blanton's, you are going to get in the $150 to $250 range for that bottle. That's a very pricey bottle. I will admit I paid $199 for that bottle. Yeah. And the reason I bought that bottle is because I could not afford to buy the entire Blanton's name in those, because they had them available. They had little Post-it notes on top of the box of what letter was in that box if you wanted the whole kit. They said, yeah, we're going to give you a discount. It was 10% or whatever it was if you buy the whole thing. And I'm like, that's awesome, but who would do that? Well, they had already sold like 4 or 5 complete sets to people. And it's like, yeah, there's people out there willing to spend that kind of money. I'm not a collector. I'm going to drink it, so I'm not going to buy that much of it. But if you get the opportunity to drink some Blanton's Gold, stop what you're doing. Take advantage of it.
Well, that's pretty much why this podcast exists, so I can, mooch off of your fancy bourbon, and I don't have to go buy it myself. So
all right.
So anyway, pretty good place to wrap up. Fantastic bottle of bourbon. We don't need to go into tasting notes. It's really, really good.
It's outstanding.
It's outstanding.
I did, just for argument's sake, put a drop of water in it. Don't do that.
No, I didn't bother doing that.
I'm being scientific. I shouldn't have been, but I was.
Yeah.
Just drink that neat. Please don't put anything in it. It doesn't need ice. Nothing.
No, not at all. So, well, thanks for joining us for another edition. Hope you enjoyed our ramblings about AI in the financial advisor community. We enjoyed talking about it for sure. So, if anything that we said hits a chord with you and you'd like to share our information, please feel free to give us a call. Go to our website, fwbpartners.com. Feel free to share any of our videos or podcasts. We would greatly appreciate that as well. Thanks for listening. Thanks for watching. And until next time.